Hi, my name is Alex Fensky, and I'm a real estate problem solver. In this video, I'm going to talk to you about what a short sale is, why banks agree to them, why you would want to agree to one or attempt one, and how you qualify for one and get it started. So with all that said, the term short sale itself is a little confusing because it sounds like something that's short. It's not. A short sale is defined as when a homeowner sells their home for less than the amount that's owed on their mortgage with the agreement from the mortgage company, or the permission from the mortgage company, I should say. So it's called a short sale not because it takes a short period of time. It actually takes a long period of time. But the bank is accepting a short payoff, less than what they're owed. So an example would be if you owe $250,000 on a home and you can only sell the home for $225,000. Well, you can't pay off the lien to sell the home because you can't sell it for enough money. You might ask the bank, hey, if I sell it for this amount, will you guys agree to let that happen and release your lien? And under certain circumstances, they will agree. So ultimately what it is it's an alternative to foreclosure for somebody who's having trouble paying their mortgage and either doesn't want to keep the home. Maybe you're already thinking about moving, or maybe you're in this position because you can't keep up with some of the maintenance or the taxes or something like that. Or maybe you've already tried some of the other options, like a loan modification. Maybe you got denied, or maybe you got one and you fell behind on the payments. And now the bank says, okay, no more loan modifications. A short sale is an alternative to foreclosure that results in you selling the home and moving. So with that said, let's talk a little about why you would do this. So a homeowner, the reason a homeowner would attempt a short sale is that it's going to be less bad. That's an official technical term. It's going to be less bad than a foreclosure. There's at this point, when mortgages are late, there's already some damage done to your credit because of late mortgage payments. That much is inescapable. But a short sale, the way it shows up on your credit report and the way that it impacts your credit, is not quite as bad as a foreclosure. A short sale is going to say something like settled for less than the full balance. Whereas a foreclosure is more like a repossession. The lender took the collateral back. So that's one element of it. Another is that if you've ever applied for any kind of credit at all, you've had to answer two questions, among others. Have you ever foreclosed on a home? Have you ever filed bankruptcy? If you do a short sale, you get to mark, no, I've never foreclosed on a home. And so that doesn't put you into that category when you're applying for credit for anything in the future, such as not just another home, but a credit card, a car loan, a small loan for whatever, maybe a furniture loan. All those applications where you might have to answer, have you ever been foreclosed on? You can answer no if you successfully complete a short sale. And then lastly, you will have an opportunity to potentially be released of any deficiency judgment from that bank. The deficiency judgment means, remember that example I said you owe $250, you sold it for $225. That means the bank had to write off a loss of $225,000. They technically can get a judgment against you for that and have the right to pursue you for it anytime over the next 7 years. As a part of a short sale, they might agree to waive that, meaning they'll waive their right to that judgment, and so you don't have that hanging over your head. Now, that's not a guarantee, but it's a possibility that you might be able to get that done. So those are all the reasons that as a homeowner who's having trouble paying your mortgage and either wants to move or can't do a loan mod, those are some of the reasons that you would potentially want to attempt a short sale. Now, you might say, well, why would the bank do this? So the bank would do this under certain circumstances. If they come to the conclusion that you're never going to be able to pay the loan, which means they're definitely going to have to foreclose on it and take it back. Foreclosure is a long and expensive process for a bank. They got to pay a bunch of attorneys. They're not collecting any money in the meantime. They have to pay the property taxes. They have to pay to insure the property. And then once they get it back, then they have to go and secure it. They got to change the locks. They got to clean out anything that was left in there. They got to have evaluations done on it. They have to maintain it. They have to keep paying the taxes, all the while until they eventually sell the property. And so all that stuff takes a long time for a bank, and it costs them a lot of money. Now, they're not going to for them, a short sale is not always better than a foreclosure, but they have some policies and procedures in place to figure it out. And that's why the results of a short sale are not guaranteed. And I keep saying attempt a short sale because you're going to need the bank's agreement, and it's got to be in their interest too. So that's why a bank would approve a short sale, is if they've figured out that you do not have the ability to pay the loan, they're going to foreclose on it, and this might cost them less. So who qualifies for a short sale? Well, not just anybody. Primarily in the residential world, it's owner occupants. It's people on their primary residence or maybe a second home. But principally, it's people on their primary residence who the bank would look at for a short sale. If you're an investor and you own rental properties and you think you're going to get a short sale, I'm not going to say I've never seen it work. It's extremely, extremely rare. Typically primary residence. And then you have to have some kind of a documented hardship. And what the bank considers a hardship isn't just like, I'm not doing so well managing my money. It's first and foremost a loss of employment or a loss of household income. If you as the borrower or someone else in the household that you were surviving off of their income now has less income or no income, that's a hardship in their eyes. Medical expenses, if there's a major medical issue in the family and you have a lot of out-of-pocket medical expenses, that they consider a hardship. A death in the family, which oftentimes does also come with a lot of expenses and the loss of income. Divorce, job transfer, military service, incarceration, all of these are potential reasons for a short sale. And lastly, unexpected major home repair expenses. Sometimes the house itself can be too much when it wasn't to begin with. So those are the sort of things that a bank considers a hardship. And then number three, so number one was that you probably have to be an owner-occupant. Number two is you have a documented hardship and the loan. Number three is the loan is either already in default, meaning you're already late on payments, or it is an imminent default, meaning you're still on time for now, but you're going to be late probably next month. You have to be able to show them that you're unable to repay that loan, not just, hey, I'm okay for now, but next month I'll be fine. They're not going to do a short sale for that. You're going to have to demonstrate that you have an inability to repay the loan over the long term. So that's who typically qualifies for it. Let's talk a little about the short sale process. So number one, the first thing that happens is you call your lender and you select that option, or you go on the website and you select the option that says, I'm having trouble paying my mortgage. And they're going to give you some different options like a loan modification, a short sale. So that's the first thing to do. They might send you a packet of information. They might send you some other documents. But number one is to contact your lender and let them know that you're thinking about that and ask what you should do. At that point, once you're certain that you're going to move forward with a short sale, you would want to list the home for sale with a short sale specialist team. And by team, what I mean is an agent that knows what they're doing with short sales and an attorney who knows what they're doing with short sales and has the staff to be able to process them. It's a very time-intensive process. It's a lot of waiting on hold for long periods of time with the bank. It's a lot of getting things exactly right. And if you're missing one thing, it's a 3-week delay. So it's really important that you work with a team that understands how to effectively get a short sale processed and approved, because it does matter who works on it and it will affect the outcome and the timeline. So that's the next step, is you list the home for sale with a short sale specialist team. And then once you get a contract from a buyer and you sign that contract, your attorney will then work with you to get all that contract information and everything submitted to the bank so that they can evaluate the proposed sale. The way the bank's going to evaluate that is they're going to order an appraisal on the property. Now, this is separate from the buyer's appraisal. If the buyer's getting one in conjunction with a loan they're applying for, this is the appraisal that your mortgage company is going to do so they can see what the current value of the home is, and then they can assess whether the price that the buyer's paying is what they believe is fair and see how much money they would potentially get after all the costs and things of the sale. So the appraisal is the next step, and that things really hinge on that a lot. Lastly, after that, and probably a litany of additional paperwork, the bank's always going to ask you for more and more paperwork at every juncture, they're going to come to a decision. And they're either going to deny the short sale or they're going to approve the short sale, or they might actually issue some sort of a counteroffer. And at this point is where your attorney is going to work with you to potentially negotiate that release of judgment, make sure that whatever short sale approval is obtained in a manner that is in your best possible interests. Once that's done, then you go through the rest of the typical sale process, culminating in a closing, and that's that. Now, there are lots of other potential complications with this. We didn't even talk about second liens, like other mortgages or other liens that might be recorded against the property. We didn't talk about if your sale contract falls through. We didn't talk about all sorts of different ins and outs. And that's why you need to be working with somebody that really understands what they're doing and has seen these problems before, because a lot of things do come up. It's a complicated process with a lot of people and a lot of businesses involved. So the last couple of considerations I would give you, parting thoughts. Number one, a short sale does not always get approved. They don't always go through. Sometimes they send you back to square one. You have to try again. Sometimes the answer is just permanently no. But it's worth a shot if you fit the circumstances that we talked about here today. Number two, they do take a long time. With the best short sale negotiators and everybody, the best teams in place, oftentimes we can get an approval within about 60 days of submitting a contract to them. But I've seen them go on for 3, 6 months, 9 months, 12 months, 15 months, sometimes only to be denied in the end. They do take a long time, and they do take some effort from the homeowner or the borrower to do all the paperwork and assist with all the processing. So they do take some time. Lastly, you might not be released of your debt obligation, that deficiency judgment. That's not a guarantee. And if you are released of it, the lender may be issuing you a 1099 saying that they're writing off this money as a loss, which kind of means for tax purposes they gave it to you. And if you're doing a short sale already, you probably fit the criteria for the IRS to be able to say that you're not able to pay the additional income tax on that additional income that they're quoting you or that they're claiming they gave you. For that, you need to talk to someone who is a licensed CPA who does tax returns, and they can talk to you about insolvency and what it takes to show that you're not able to pay the tax bill on that gain because you didn't actually get the money. So again, the most important thing here is work with a real estate professional and a real estate attorney who really understands short sales quite a lot, and consult a tax advisor for the appropriate things for that. So final step or the first step really, but my final parting thoughts is if you're considering a short sale, reach out to me. We'll talk about it. And then the first step to get started is to contact your bank and let them know that you're having trouble making your payments and you would like to ask about a short sale. That's all. Click like and subscribe so that you can follow our other videos for more information, more detail about a lot of these processes. And always feel free to reach out for help and we'll get in touch with you directly. Thanks a lot.